Hello, Kyle Stock Bulls, and welcome to YouTube video 7. Today I am going to be talking to you about how to get knowledgeable about the stock market. In the last video, I talked to everyone about how to get started opening a stock brokerage account, which will basically allow you to buy and sell stocks. It is like a bank for your money that you are going to put in the stock market. So we got that covered. Now, once you have the account, what do you do with it? When you first get your app or whatever you're going to use to trade stocks, it can be a little foreign looking, especially if you've never done any kind of stock trading before. It's going to ask you things such as typing in a symbol, quotes, positions. It's going to have all these different things listed out. So I'm going to go ahead and go over what each of these things mean so you can get a better idea of what is going to look like when you start to trade. The first thing that you have to know is a stock symbol. A stock symbol is a letter representing a stock. So I'm going to go ahead and give you a few examples. Apple would be stock symbol AAPL. Amazon would be stock ticker symbol AMZN. And each individual stock has a different stock ticker. How you can find these is you can Google whatever company. So let's say I want to go ahead and Google what the stock symbol for Wynn Resorts is. I type in Wynn Resort stock symbol and YouTube will pull up the letter combination that I need to type into my stock brokerage account to be able to buy and sell shares of Wynn Resorts. It is really essential that you know what the symbol of the stock is because you don't want to buy and sell the wrong stock, because there are some stocks that have very close symbols that are not what you want to invest in, basically. There's a lot of different combinations out there, so you can easily type in a wrong letter, so you want to make sure you know for sure what you're buying and selling shares of. The next thing you're going to be faced with is something called quotes. Stock quotes are basically just something that tells you what the current price of the stock is. This is something you'll be able to see in a little bit better detail when the stock market is open, because that quote price will constantly be changing as people are buying and selling the shares. If you're using TD Ameritrade mobile app, your quotes are going to be on the far left side on the bottom of the platform. So that's something you want to keep in mind. The next screen that you're going to be faced with is a tab to the right, and that's going to be called positions. So positions is all the different stocks that you have bought and that are currently in your portfolio. So it's going to list everything that you own. It's also going to show how much cash you have on hand. It's going to show how much money is tied up in the stock. And then it's going to give you a total liquid balance, which is all the balance of your cash and your stock. So those two are pretty simple. The next thing you go to is going to be your order screen. So your order screen is where you're going to do all of your buying and selling of stock. It's going to have the stock symbol. It's going to have how many shares you want to purchase. It's going to have the price, and then it's going to have some little things below it in tabs that say things like limit, market, stuff like that. And what that is that's different types of orders. So limit orders, for instance, is buying a stock at a particular determined price. The order will not fill or the shares will not be bought if the stock does not reach that price. The next type of order that most people will want to be familiar with as well, especially when you're starting to invest in trading stocks, is a market order. What a market order does is it buys the stock for you as quickly as it can at the current market price. So you get whatever price the stock currently is in the market at that time. The best the market maker can get you is what you try and achieve with the market order. You're also going to be confronted with a screen that has like your options, your settings, and to really get a full handle of all these different tools, it's a good thing, especially if you're using the TD Ameritrade Thinkorswim platform, to use the training that they offer, because it goes over what portion of each of those different tabs and what they mean. So it gives you a whole idea of how to operate their system, because you don't want to start trading stocks when you don't know how to operate the system that you're using. One of the best ways for investors to start out is to use what's called a paper trading account. A paper trading account lets you practice buy and sell orders with the real stock market prices. So if the market was actually open, it's as close to that as possible. It allows you to try different things without having to risk your own money. It allows you a chance to get used to the platform, see how things are looking, and then you get a feel of what it's going to be like when you're actually trading a day in the stock market. I will say this as well, especially if you're just buying stocks and planning on holding them for a while, being a long-term investor, you won't get as much practice with the platform as you would if you were a day trader. Now, when I first started out in the stock market when I was 19, I wanted to be a day trader, so I did quite a few trades and I learned the system pretty fast. But for those of you who are wanting to do more long-term investment, that is why a lot of people go ahead and just see a financial advisor, because it makes the process a little bit simpler for them if they want to go ahead and have someone else manage their money. Generally, people who are inclined to manage their own money that's not long-term investments, a lot of times these people are day traders, meaning they buy and sell the stock within the same day, right before the closing bell, or they might be a swing trader as well, which means they don't hold a stock position for more than a couple of days. Now, you can still have your own brokerage account and be a long-term investor. There's a lot of people who do it, but a lot of people who manage their own money like to trade more frequently. You get to know the platform a little bit better. You will often hear debates between investors about what's a better strategy, whether day trading, swing trading, or holding investments for the long term is the better strategy. You may hear that 90% of stock traders fail. That is an actual true statistic, but what you have to keep in mind is there's 90% of traders that are constantly failing. They may have been trying for a long time, but they may not have put in enough work to get an understanding of the financial market. Trading in the stock market is just like any other skill. It is not easy. You have to keep in mind, people that want to become a doctor or lawyer, they have to go to school for many years before they get great at their craft. It's the exact same thing with trading in the stock market. You may have a while where you lose, especially if you're not a long-term investor, or you may get lucky and you may make a lot of money and you may lose it all as well. So that's something you have to keep in mind. Every trader has a bit of different circumstance. It really just depends on what you learn when you first start trading, how your luck is as well. Luck does play a portion in it. It's not 100% determining factor. A lot of it's skill. You have to be willing to put in the work. That's all I can say about that. Trading in the stock market takes a lot of hard work. You have to be constantly educating yourself about it. It's not something that you can just learn how to do in like a couple of months and say, I've mastered it. Okay, I know how to buy and sell stock. Then it gets a little bit fancier. You have to learn how to read charts. That's another thing. When you're trading in stocks, you have to realize what the charts are telling you. I will be making more videos later on in the series where I talk about specifically how to read a chart. That is one of the most important things when trading in the stock market. And without doing a little bit of research on how to read a chart, I suggest that you not start trading at all until you do some research on how to read a chart. Use that paper money account if you want to start to get a feel of how the market works, but don't risk your own money when you don't know what you're doing. When I first started out trading, I did a little bit of research and I did a couple of trades where I risked just a couple of $100. Nothing very significant to me at the time. Just wanted to learn the very basics, just buying and selling stock, and that's what I did to teach myself. I used the paper trading account as well, but I started out with my position sizes or the amount of stock I was buying. I started out with a small amount. That's what's called in stock trading position size, how much shares you have of a stock. You want to try and start out with small position sizes so that way you can learn how the stock market works. Like I said, nobody learns this overnight. Even the professionals that work on Wall Street and make millions of dollars a year don't get every single trade perfect. You're not going to win every single time. If you win 70% of the time, you're blessed. If you win 50% of the time, you're average. That's something you have to keep in mind. It's all about statistics as well. You can read a lot of different statistics about stock trading, and you'll eventually find out most of the time they are true. There are a couple outliers, a couple people who beat the system. Those people work very hard at what they do. It's like nothing else. If I wanted to play in the NFL and I wanted to be a football player, those guys practice for hours and hours and hours. They go out and sweat their butts off, and they're tired as hell at the end of the day. It's the same kind of idea with stock trading. You're not doing it physically, but you're working with your brain. Trading is all about using your brain. Another thing, too, I will say about stock trading is that you have to take emotions out of the game. It's very hard to do. People get very emotional with their money, and when you first start trading, you'll definitely feel that. I'd say one of the biggest things that can happen to you, especially when you first start trading, if you get a big win, you get a big runner, you buy a stock, it keeps increasing in value, you keep seeing gains, you tend to get greedy. You feel really good about it. You want those gains to keep coming. I know about that. When I first started trading in stocks, I actually had a pretty good couple of stock picks that made me some money fast. Now, I did learn, though, however, doing my research beforehand, before I started trading the stock market, once you make so much money, you need to take some off of the table. At least take out your initial investment, when you're up 50 or 100%. So that way you're just playing with the house's money at that point. You can't lose anything. You just have to manage risk. That's what the whole game of stock trading is about. They might as well rename the title of stock trader investor to risk manager. That's all you're doing. You're managing risk. It's kind of like in life. There's risk out there that you could walk outside and get hit by a bus and turned into road pizza. You will hear that phrase if you ever watch Shark Tank. Kevin O'Leary will say that. What happens if I invest in you and you get turned into road pizza? It's the same kind of concept. You have to take risk to win in the stock market, but you have to remember there's risk all around you. It's not just in the stock market, and you have to be willing to take those chances to further your progress. It's just part of becoming an investor. Investors by nature are risk takers. Now, they are not as much gamblers, but they're risk takers. You may hear some people say stock traders are gamblers. You can get to that point, yes. You can be gambling in the stock market. It is possible, but you don't want to get to that level. You want to take it from a disciplined approach. If you don't take stock trading from a disciplined approach, you're either going to blow your account up or you're going to do something majorly stupid that costs you a whole lot of money. Either way, it really just depends on how much money you start with. But if you're not careful, the stock market will bring you down to your knees. It sounds crazy, but believe me, it can happen. The brightest of people on Wall Street get smacked into the wall when they think they've learned it all. And I can tell you from firsthand experience, I've made money in the stock market. I've lost money in the stock market. Overall, I'm ahead. That is the key. But you can be wrong. Keep that in mind. You can be wrong. And more oftentimes than not, if you're not 100% meticulous in your trades and your investment decisions, you will get your butt kicked. There are people 24 hours working, trying to win on Wall Street. It is the most competitive business field that there is on the planet. That is the whole basis of the financial system in America. The richest of the rich are out there fighting on Wall Street, and you have to do your research if you were going to take any money from them. That is what you were trying to do. You were trying to extract a little bit of money out of the market into your pocket, and it takes a lot of work to do it. It is not easy. Thank you, everyone, for watching tonight's stock market video. I will be having more videos come up in the YouTube series. I want you to go ahead and smash that subscribe button. Leave this video a like and a comment, and I will see you tomorrow for the next stock market video. Thank you for watching, and go ahead and subscribe.